To acquire knowledge, one must study, but to acquire wisdom, one must observe. Marilyn Savant. That is keen advice, and it is exactly what we do here. We study, yes, but to acquire the wisdom of understanding these markets, we observe. That is what these daily reviews, and of course right now, the comprehensive review and forecast we do every Friday is all about. Did you get your text about the weekly vertical crossover? Man, are our charts not incredible? Check it out. Weekly vertical crossover on gold going down. Now, it could be a big up day on Monday, and it could pull back through that. That is not a super strong crossing over, but it is a crossover. It's right there at it. Now, we are going to move our vertical crossover over to it. Again, with the caveat, be careful if it reverses on you and it ends up being a bounce off, which it can do, then don't fall for it. Stop, get out of the trade you were in, take the minor loss, and move on. What do you have going for you? Well, you had a big down day on Friday. Didn't think we'd get to this. But again, looks like we are there. Now, again, that caveat, we'll get to it here in just a minute when we cover it. But have these not been incredible weeks, folks? Remember what time of the year we are in. We're in the sucky time of year. We're in the summertime trading zone. There's supposed to be light volume. Things are up and down. They're up a day, down 2 days, up a day, down 2 days, up 3 days, and you just can't figure much of anything out. But look at what we are seeing. We had the weekly vertical crossover back on the 8th on the S&P 500. Look at this incredible week for the day, up over 2.5%. Price percent oscillator spiking up, derivative oscillator gaining upward momentum, big green up candle. Look at that high. 321.28. That is incredible. With the jumping in point, let's see, the lat 286 to 328. Folks, that's just, or 321 from 286. That is incredible. That's just mind-boggling. Again, what can I say? The weekly vertical crossover continues to amaze me. Have we not found something that is incredibly valuable? Now, with all this up movement, oops, I grabbed the wrong one. We'll adjust that here in just a minute. We need to adjust because you want to always make sure that your trend lines are updated reasonably. You like to connect 3 candles, and we're pretty good on that. Let's make it a little more accurate. Not quite connecting that latest candle, but again, stair steps going up. We want to update, and again, try to grab 3 candles if you can. Trend lines aren't all that helpful if you don't have at least 3 candles, if not more. And that's a decent trend line. I can see better. I've seen better. That's where we are as far as the weekly goes. Look at this 2-day chart. Wow. Stair steps moving up. Look at that. We've basically connected 4 candles there, just about 5 candles, just about. That is a great trend line. And again, look at the first day of this latest trend line. Huge day reflecting that 2.5+%. Price percent oscillator heading up, derivative oscillator gaining upward momentum. We just keep moving on and on and on to victory on this S&P 500 trade. Look at that 4-hour trend line up in the morning and maybe a little bit of a pullback off the high in the afternoon. Price percent oscillator heading up, derivative oscillator gaining upward momentum. What can I say? Except it's incredible. You want to learn all of our secrets. You want all of the special sauce that we have. Well, that's, of course, our Accelerated Market Mastery course now available. See the link in your show notes. We sent out an email to all the subscribers yesterday. Also, special training for you in your show notes for all subscribers. You can subscribe for free at chartingwealth.com. Backtracking, using stock charts to find trading patterns. Let me tell you, number one thing we do, it's the way you qualify any stock or ETF that you're interested in being able to figure out if it's chartable. If it's not chartable, forget it. How do you figure out if things are chartable? You backtrack. Take that special training. If you haven't had it, you need it. If you hadn't had it in a while, take it again. A great one. It's in your show notes for subscribers. Now, let's leave the S&P 500, go to the Nasdaq 100. Check it out. It's been going up even longer. It crossed over going up on a weekly vertical crossover back on the 1st of May, somewhere around the 215 mark. How high? 3, 40, 30. Is that not incredible? Again, after 1, 2, 3, 4, 5 weeks, just insane. Just insane. So again, follow the charts. Don't pay attention to anything but price movement. Now, folks, when will this end? Oh, it'll end. It'll end, and we'll go back to some crazy downstroke. And when it does, we'll do the same thing we did when the charts crossed over going down. Remember writing that down? We had a weekly vertical crossover, told us it was happening. We jumped in that second week, and it was good to us. So we'll do the same. Do these practice trades every single day. Fill out your trade worksheets, and at least the weekly market worksheet when you listen to this broadcast, the comprehensive review and forecast every week. Price percent oscillator heading up, derivative oscillator moving up, nice big candle going up. 2-day chart. Look at those stair steps moving up. It's beautiful there too. We see the price percent oscillator heading up, derivative oscillator gaining upward momentum. Again, folks, how long will it go? It'll go until it stops. Up in the morning, further up in the afternoon, bouncing off the red signal line and looking nice on that 4-hour chart. What can I tell you? You play the game until the getting isn't good anymore, and it's good right now. Now we're going to leave the S&P 500 and the Nasdaq 100 and go over to 20-year bonds. Now, they were down super huge during one part of the day. What do we see going on right now? Had a big down week, the biggest down week we have seen in recent history, going all the way back to last year. I do say that we had that funky, crazy week, the 3/20/20, ending then on the 20th of March. But as far as solid red down candles, that's what we have with that long wick on the bottom. Price percent oscillator spiking over, going down, closed the second week after that very successful weekly vertical crossover. Those of you who've been playing that practice trade, of course, either with puts or with the inverse fund, and that is TBF. We've been talking about that for the last 2 weeks. TBF has, of course, been going up. It is a separate fund. It has a different pricing model. And again, people say, well, when you practice trade an inverse fund, should you switch over to that chart? I say no. I stick with the charts I know, the charts I read, the ones I track. And if I'm going into an inverse fund or a put, I stay with the big chart. And that's just the way I do it. Again, these inverse funds are set up to track percentage-wise, and they're pretty good at it. They do revalue, and I tell everybody, you're not going to understand or learn how to properly practice trade these inverse funds if you don't do it. And of course, if you have TC2000, which is the paid version of freestockcharts.com, which we're coming to you from right now, you can paper trade right there on it. And it's as realistic as it gets without spending real money. So I do encourage you to consider TC2000. There's a link in the show notes. You get 25 bucks off if you follow our link. It helps support our channel. They pay us a little bit for all the subscribers. And we so appreciate those of you who do use that link, and it'll save you some money. So that's what we see. Derivative oscillator gaining downward momentum. Price percent oscillator spiking down beautifully as it's supposed to be doing. 2-day chart. Look at the first day of this latest 2-day candle. Look at the low. The low, 153.61. That is incredible. Again, just beautiful. Going into 9 days of down movement, this latest being the strongest and longest candle. We go to the 4-hour chart, see some down. That's where we had that strong down move, a little bit of a pull back in the afternoon. But again, still strong down movement. Quite beautiful. That's where we are with stocks and bonds. Lastly, before we get into our extra 3 charts, we're going to go to gold. Gold, like we said, down for the day, 2.01%, just managing to do that crossover for you. And again, watch it because it is a bit dangerous. If gold pops back up strong on Monday, then of course it can pull completely away from trying to cross over there. And if you decided that's too close, not going to jump into it on Friday, that's fine, my friends. You don't have to do it. You can wait until that is solidified, and for sure, that would be next Friday, possibly. And if it does move back up, then you'll be glad you didn't take that risk. But again, these practice trades are important. You need to do as many of them as you can. Do them for the right reasons. Record on those trade worksheets. That becomes your stock trading almanac. You can look back at it, the lessons learned, the important things. You learn the nuances of each of the stocks or ETFs that you're practice trading. I can't tell you how important that is. That is how you really, really supercharge your training. Now, we see the derivative oscillator still positive, price percent oscillator trying to cross over, going down. We have a red spinning top indecision tending down for the week. We go to the 2-day, very strongly down, strong down candle. You can see a solid red down candle, first day of the latest. Price percent oscillator gaining downward momentum. That's good to see. 4-hour chart. Big down in the morning, a bit of a pullback in the afternoon. It actually had crossed, the weekly had crossed over more strongly in the morning, and with the pullback, a little bit of a pullback in the afternoon, lost some of that power. And we will go ahead and redraw our 4-hour trend line. And if you didn't get our text message about the potential, I'm trying to, instead of waiting till Friday after the market closes, trying to give you a heads up so you can consider jumping into a practice trade before the market closes on Friday and get the most out of it. And again, if you're not a subscriber, I'm sorry, you got to be in the States. We can't send text messages overseas. Our service doesn't allow that. But again, if you're listening to this comprehensive review and forecast, you're going to find it out. And in fact, I'm going to start talking about them on Thursday, as I did yesterday, so you can be watching it here in the U.S. if you live overseas. Now, if you're in the States and you haven't subscribed to our texting service, all you got to do is text to the number 33222, the word charting wealth. Make it one word, charting wealth. Again, text that word to the number 33222, and you'll be signed up for free. We don't spam that list. We send that out with weekly vertical crossovers and other very important information, and typically it might be 1 or 2 texts a month. So again, thank you so much for supporting us there. Now, that's where we are on gold. That's it, folks. If you're interested in only our first 4 charts, that is the 2 stock indexes, 20-year bonds, and gold, we're next going into Bitcoin, real estate, and oil. And I tell you, great news to report on that real estate weekly vertical crossover from last week. It's just incredible what real estate has done. If you jumped into that, you're going to be very happy to see how the day went. If you haven't purchased our book, we've sent out a bunch of them today, and we've been having a lot of overseas orders. Thank you. That is the 2nd edition, and we're sending it out. Autographed copy. We got one for you. Follow the link in the show notes. If you live overseas, email me, cw@chartingwealth.com. We'll get you off a PayPal invoice, get your book out to you wherever you are in the world. Thank you, our friends in New Zealand, our friends in Canada, our friends in Singapore, our friends all around the world. Appreciate you being with us, whether you are in the States or you're in Europe, Asia, Africa. We're here for you. Now, let's keep pushing through these charts. Bitcoin down a little bit for the day, 0.5%. We look at the, let's get away from this 4-hour chart, go to the weekly. Always start with your big chart. Look at that price percent oscillator still moving up. Still haven't captured the high. The high so far, $9,934, almost $9,935, right at the 35 mark. What do we see here? 9,978.93, so 9,979. And again, haven't hit that high yet, but we see that price percent oscillator moving up, derivative oscillator, maybe a little more than flat. It's very close to flat. But again, a green candle up week, that's good to see. 2-day chart, we can see really this sideways slide underway, just waiting for more energy to really pop it up, heading down just a little bit on the price percent oscillator. Looks like derivative oscillator's flat. Look at that 4-hour chart. We had that crossover, things peaked, then dropped, and then sliding sideways down for the day, 0.49%. The derivative oscillator's gone negative. Price percent oscillator's just barely positive. Keep your eye on things. We'll see what Bitcoin will do when the new week starts. So that's where we are on Bitcoin. Now the great news. Those of you who jumped in as we told you about the crossing this last Friday, the 29th of May, you jumped in somewhere around the $77 mark or so. Look at where property has gone. Real estate, a high of $86 in 1 week. That's from $77 to $86. $9 was the potential on this in a week. Is that not crazy? That is beautiful. And what did we see just on Friday? 3.79% on Friday. That's insane. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Go to the 2-day chart. It crossed over all the way back on the 9th. Now it popped up for 2 more days and then slid sideways for a long time, then down for 4 days, stopping on the 13th. And the latest rise, that was stopping on the 19th. The latest rise, the 15th. The latest rise started on the 19th. And look at this latest candle, the biggest we've seen. That's the first day of, that's the first day of the latest 2-day candle. So again, still got another day to draw. We go to the 4-hour chart, we break it down even further. You can see where things slid sideways for a while, popped up, slid sideways and took off again and again. Up in the morning, really strong, a little bit of a pullback in the afternoon, so it's even higher during the intraday. So that's beautiful. Again, that weekly vertical crossover isn't steering you wrong, is it, folks? Just insane. Okay, lastly, we go to black gold. The biggest gainer for the day, 5.20%. Crazy. Getting closer and closer to a weekly vertical crossover. Hasn't happened yet. We see we've got 3 weeks of building momentum in oil. We'll see where it goes. We look at that 2-hour chart. 2-day chart. It crossed over on the 19th of May. Went up for another 2 days, sideways for a while. In these last 5 days, it has been moving up. The first day of this latest 2-day candle, the strongest. We go to the 4-hour chart. And of course, we see finally the price percent oscillator moving away from the red signal line, derivative oscillator gaining upward momentum. So a great day for oil. Keep your eye on oil. We may have a weekly vertical crossover soon enough. So again, folks, things are going swimmingly well. S&P 500 continuing that beautiful gain. Nasdaq 100 continuing that beautiful weekly vertical crossover, just making you more and more and more virtual dollars in those practice trades. TLT, 20-year bonds, continuing to hammer down just like they're supposed to. If you're in a put or an inverse fund, TBF, you are doing very, very well. And gold, again, nice to see it finally shaking something out. We'll see how this next week continues to move. If you jumped into the crossover, just be a little careful because, again, it did pull back a little at the end of the day, but we're right there at that crossover. If it bounces off, things don't go your way, that's why we practice trade. There aren't any guarantees here. There are calculated risks you are taking based upon historic price movements, charting patterns, price percent oscillators, derivative oscillators, Heikin-Ashi candlesticks, Bollinger Bands, trend lines, all the things that we use here. Remember, we are trend followers. Again, those of you interested in taking our accelerated market mastery course where you get all the gravy. If you're interested in that, follow the link in the show notes, watch the video, and when you're ready, send us your email. Well, email us, cw@chartingwealth.com with your telephone number. I'm interviewing everyone that's considering the course to see if it's right for you. And if it is, we will qualify you for it and get you in. If not, then you'll wait till next time. We want to make sure that the folks that are getting in are the folks that should be getting in and taking that course. Priority given first to the Patreon members, second to the book buyers. Both of them are getting substantial discounts, 10% for the Patreon members, 5% for the book buyers, and then everyone else. We do have very, very limited space, and we look forward to getting that course going here in July. Not soon enough, I know, but we'll get it going soon. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.